In this video, we're going to be taking a look at an ascending channel or a rising channel. And then we're going to take a look at Dogecoin because I think this might be a good example, or this might be an ascending channel in general. But I might not agree with everything that the Investopedia says about trading in between those levels, but because it says that you could do that. What I was going to say is, yeah, we're going to get into, I just want to go through, okay. We're on Investopedia right now. I'm gonna leave a link in the description, and then you can go there and check it out for yourself. We're gonna be taking a look. Maybe we'll be looking at more stuff like this, trying to reference what we're looking at on Dogecoin, on Investopedia. If you like this video, consider subscribing. All right, so let's get into it. An ascending channel, rising channel. So it's basically what Dogecoin is looking like right now. We have resistance, we have resistance, we have support, we have support. We're bouncing, we're bouncing in between these two trend lines. This one wasn't perfect, and it talks about that in the article, actually, how it doesn't follow it all the time, but we're bouncing in between these two trend lines. In my opinion, as long as we are in this channel, then I'm continuing to hold onto it. If we break this support though, like let's say because we have support, if we break that trend line, that could be a change in direction. If we bounce on this trend line, which it looks like we're doing, we're finding support on this, and I talked about this on this morning's video. If we bounce on this, then maybe this could be the area that we're looking at. But let's go ahead and take a look and my next target was at .394 because of the Fibonacci retracement level, the other things that we look at. So, and that the article talks about that, but I want to get into ascending channel. Definition, how to use it, trade it. I'm just going to basically read this article so you don't have to. All right, so what is an ascending channel? An ascending channel is a price action contained between upward sloping parallel lines. Higher highs, higher lows characterize this price pattern. Technical analysis construct an ascending channel by drawing a lower trend line that connects swing lows and upper trend line that joins the swing highs. This pattern is opposite counterpart to the descending channel or a falling channel, and basically it's talking about what we just talked about, is drawing those two parallel lines. It's bouncing in between those two trend lines. And okay, let's go back to the article real quick. All right, so the key takeaways: an ascending channel is used in technical analysis to show an uptrend in securities price. It is formed from two positive slopes, trend lines drawn above and below the price series depicting resistance and support levels respectively. Channels are used commonly in technical analysis to confirm trends and identify breakouts and reversals. So like I was saying, let's go back to the Dogecoin chart real quick. We haven't really got to this yet, but partly, if we break that trend line, that's the reversal that it's talking about, or that I was talking about and it's talking about. And if we break this up channel, if we break this trend line, these two resistances, then that's also a indicator that it's going to go up. Breakouts, which is a breakout, boom, or a reversal, because we had been trading in this whole area. And like I said, my target would be this, and then so that would be one thing, and then if we broke that trend line going to the downside, that'd be a second signal kind of thing. But let's go ahead and go back to the article. All right, understanding ascending channels. Understanding ascending channels. Within an ascending channel, price does not always remain entirely contained within the between the pattern's parallel lines, but instead shows area of support and resistance, and traders can use to set up stop loss orders, profit targets, and breakout above an ascending channel can signal a continuation of the move higher, while a breakout below the ascending channel can indicate a possible trend change. And that's what I was just talking about. If it breaks that bottom line, trend change. If it breaks the top line up here, like I was talking about, breakout. And then I usually target from the top to the bottom of the channel, something like that, and then I would drag that to the breakout. That's the way I've kind of learned about it. Anyway, that's how I kind of learned to do it, should I say. Okay, so let's go back to the article. All right. Ascending channels show a clearly defined uptrend. Traders can swing trade between the pattern support and resistance levels, or trade in the direction of a breakout or breakdown. See, I prefer the direction of a breakout or a breakdown. You would buy a breakout, you would sell a breakdown. So like basically, let's go back to the Dogecoin chart like we were just talking about. A breakdown would be that. A breakout would be breaking out of this pattern, breaking out to the upside. That would be a signal to sell. But let's see what else it says about that, because you can't just rely on just that line change, because I also sometimes talk about it, but it's the volume. We want to look for the volume. So it says that somewhere in this video, and here's like a little chart of, I mean, a little example as well, where it's bouncing in between the two trend lines. Right here wasn't perfect, but it's basically just an area. I would say even drag that line down a little, in my opinion, and then it'd be more of like a broadening channel. But that's just my opinion. I use the bodies. I think it looks like it's using the wicks, but I don't know. It's like kind of, but anyways, that's a rising channel and ascending channel. So trading the ascending channel, support and resistance. Traders could open a long position when a stock's price reaches the ascending channel's lower trend line and exit the trade when the price nears the upper trend line. A stop loss order should be placed slightly below the lower trend line to prevent stop losses if the security price abruptly reverses. Traders who use this strategy could ensure that there is enough distance between the patterns parallel lines to set up an adequate risk-reward ratio. For example, if a trader places a 5-stop with the width of an ascending channel should be the minimum of $10 to allow for a 1-to-2 risk ratio. This is where I kind of am disagreeing with it. Is like, it's saying you could trade buy here, sell here when you hit the top line, buy here, sell here kind of thing. I wouldn't really, in my opinion, I don't really like trading when we're in an uptrend. You know what I mean? Like, why even mess around when it's more of a long-term strategy to just not even to trade like a bigger trend? You know what I mean? Instead of trying to do this little stuff right here, you could totally. I mean, that's a strategy. Like I was just saying, I mean, you could. It'd be hard to tell where the top is on this thing, though. I mean, I guess right here it kind of showed you, because there was a little bottom right here. It bounced to the downside. This is right where the channel's starting, though. And I was looking at that earlier too. We have resistance right here, support right here, support right here. These two supports have just made this line. So this is actually reinforcing that line right here, getting that support on there, boom. And this one are still kind of in the baby phase, in my opinion, because I mean, I could have drug it down, and I was thinking about this too. This almost looks like it was more of a trend, like something like that, and then we broke it going to the upside. So in that case, I changed, you know what I mean? But then it got the resistance, and then that's where the changing of the line kind of comes in my opinion. So yeah, I mean, what I was thinking though is this, if we come up here, this is still kind of a brand new, you know what I mean? Like this one, this support, and this last support that reinforced this line right here, because it was just these two lines. This one was like, yes, confirmed it. We haven't really gotten a third one on this one, but I'm not sure where I was going with that. But anyways, I think the next place we could be potentially looking at is the top, though. So like maybe we could even be going past my target that I've been looking at, and maybe try to come up and hit the top resistance. You know what I'm saying? Maybe it'll be a little bit higher than that. We're gonna have to wait and see. I'm still looking at .394 though. But we're gonna, like I said, I'm gonna watch this trend. Like someone asked me the other day, when are you planning on taking profits? I'm watching this support. If we break that support going to the downside, then that's when I'll probably, after we hit the target, my .394, like let's say we hit the target and then we do that, then I'll start. Then I'll be like, okay, we have, there's two signals for me. And I'm gonna take a better look at the chart after we finish this article though. Okay, so breakouts and breakdowns, and this is where I kind of trade, or I do trade on these ones. Traders could buy a stock when the price breaks above the upper channel line of an ascending channel. If it is prudent to use other technical indicators to confirm the breakout. For example, traders could require that a significant increase in volume accompanies the breakout, and that there is no overhead resistance on higher time frame charts. So that's kind of, let's go back to, let's do breakdowns real quick. Before traders take up a short position when price breaks below the lower channel. Before traders take a short position when the price breaks below the lower channel line of an ascending channel, they should look for other signs to show weakness in the pattern. Price failing to reach the upper trend line frequently is one such warning. Like we are kind of having trouble hitting it right now. I mean, we have been having trouble, like we were talking about today. It's like, instead of like coming up and hitting it right away, we're kind of having trouble doing that. And I think that's, oops, I'm not on the right screen. Sorry. We've been having trouble in this area. And instead of not just coming up and pushing through, we're kind of having trouble. Maybe that's what it's talking about right there. That I feel like that's what it's talking about. Okay. Traders should also look for negative divergence between popular indicators such as the relative strengthening index and price. For instance, if a stock price is making higher highs when the ascendant channel, but the indicator is making lower highs, as this suggests upward momentum is waning. All right, so I never look at the RSI on my channel, but I probably should. So let's kind of look at the RSI. Okay, so we have too many indicators right now. Let's go ahead and delete these. Over here, we're going to delete the 9 moving average. We're going to delete the volume. I think the volume could have been okay. RSI. To go to the indicators on TradingView, just go to indicators and search for it. I have it starred, so there's the RSI. But basically what it's saying is, and it's kind of doing it, honestly, a bearish divergence is when you look at the RSI, the price of the coin is going higher, stock, whatever, and the RSI is going lower. That's a bearish divergence. I couldn't explain the RSI to you. That's another video, and that's probably not going to be, it's not on my channel. But it's basically, if this is going down, that's I think the price strength, or it's the relative strength index. I don't know. I should probably look into that. Maybe next video. But anyways, if all I know is if this is going up and this is going down, it's called a bearish divergence, and don't be surprised if this goes down as well. So that's interesting that that's kind of, because I never look at this. Like I was saying, I probably should for these bearish divergences though. And that's interesting that it tells you to do it in this instance. So that'd be the breakdown. So, okay. So what that's saying also for the breakout and the breakdown is, let's go. So this is a second indicator. You know what I mean? If this breaks to the downside, not only are we looking at this line, but we're looking at we're looking for bearish divergences. We're going to set up that volume indicator again, and we're going to look at that and see what kind of volume is going on. Is it red volume? Like do we get a nice big spike of red volume if we break this going to the downside, big red volume? Or is it going to be low volume, barely any volume? You know what I mean? Just like kind of weak, meaning that it's, there's not a lot of volume. Many people trading it, or it's not moving around. So volume being traded, I think, you know what I mean? So not only do we watch the line, but we watch these other indicators. We got that RSI giving us that bearish divergence where it's going down and this is going up. And then we get if it does break it going to the downside, it's having trouble right now, kind of pumping to the upside. That's when I set up the Fibonacci retracement levels, those are the kind of stuff that I look for. Are we just kind of like breaking through and kind of just pushing up, or are we having trouble? It's possible that, and that's why I drew these top and bottom right here. We actually broke the top, which is also kind of interesting, because on this morning's video, I was talking about breaking through the top or breaking through the bottom, and we did break through the top, but it kind of got rejected resistance and pushed downward, and we're still in this channel pattern. And I was also talking about this trend line too. That was like, if we break this one, then that will be the first signal. If we break this bottom one, that'll be the second signal, and then I'll probably take profits and set up a limit order at .339, the Fibonacci retracement level. Somewhere around there. Is that what it is? It's a little bit higher. Anyways, let's go back to the article. We're almost done. I think that's about it, actually. Ascending channel versus envelope channels. Okay, I'm not really familiar with the envelope channel. So that pretty much does it though. Ascending channels, basically, in my opinion, as long as you're in this channel pushing to the upside, I think you're good. And if you break it going to the upside, you might see fireworks. You know what I mean? Because that's parabolic movement. We're already on an uptrend, and then you're getting a breakout. That's when the price goes like woo, and it just like skyrockets. You know what I mean? That's when you get those crazy candles. But and I was looking at this up because someone said an ascending channel is a bearish trend. It doesn't say anything about that here, but I did also like find another thing when I was doing research, or in the article you can't see now, but when I was also doing research on another, on Google or whatever, and it did say on a place that it was a bearish pattern, but it has to break, in my opinion, it has to break the trend for, I mean, it has to break the trend, one of the trends first to really verify. I think what it probably is saying is it's probably like more than often it's probably a bearish, like it's probably going to go to the downside because like I was saying, this is getting an uptrend on top of it has to be a really, I mean, it's a bull market. That's when it's like an officially like bull, or either that or blowing off a top too. That's also possible. Okay, so I think that about does it though. Do we need to take a look at Bitcoin really? I mean, let's see. Dogecoin. Let's take a look at Dogecoin. And this is, if you're, like I was saying, if you're not subscribed to these videos, you should maybe, if you're interested in Dogecoin and or trading, kind of just watching charts. But let's take a look at Dogecoin real quick. Like I was talking about, we had resistance, support. These are the two lines that I was watching this morning. And I was saying we need to break this resistance going to the upside, or this bottom one going to the downside as well, to really get confident on either the next to my target going to the upside or taking profits and going to the downside. If you watch the channel, this is Dogecoin. We had a nice big run up after trading in this area down here for a while, for a year, and then we started having trouble. I got the Fibonacci retracement tool. I dragged from the bottom of the trend, or the bottom of the run, to the top of the run, just to see just to kind of like, if that was the top. We kind of got a double top right here a little bit. And then we set up the Fibonacci retracement levels, and it gives us levels to watch as we go down. I bought the 23%, the 38%, and the 50%. Boom, boom, boom. As we started heading down, this gave us support, bounced to the upside, came up here, got resistance right at the 23% level. We're really close to the 23% level now, and hitting my target, which is kind of the same thing as right here. And I think, I think I bought and sold over here too. So that was a nice little trade. The next one, it was here, bought it again and then sold it. Because once we start breaking, like I was saying, if we break to the downside, what I'll do is I'll probably take profits here and then try to buy up that Fibonacci retracement level again at .338. It kind of backfired on me back here because I sold it up here and it's never came down and hit it, and I've been talking about that in almost all my videos. But so it's not perfect, but I've been watching, Fibonacci retracement levels is one of the big strategies that I use on my channel, and especially if you guys know that if you've seen my videos before, but some people haven't. So yeah, watching this channel pattern, let's see if it breaks that channel pattern going to the downside, or if it just continues in it. I think if we break that Fibonacci retracement level, we could be kind of targeting the trend line, and that's a moving trend line, so we don't know where it's going to be, but when it comes up to it, maybe it'll do something like this. This is sitting at around .411 potentially. But yeah, like, I mean, if we get one of these guys, let's see, let's do this. If we do that, you know what I mean? It moves as it goes higher. So if it takes longer to like go up there, it could be hitting higher. So yeah, well, let's see. I think the first thing that we want to look out for though is this resistance right here, resistance, trend line breaking to the upside. So yeah, that's what I'm thinking. If we could break that, then we get more confident and at least the target, maybe we could even go higher. But like it was talking about in that article, this could be a good place to take profits and it could go boom. I don't know. we'll have to wait and see. I think once it hits the target, once it breaks the trend line, that's when I'll be kind of looking to take profits. Until then, if it's bouncing in this trend line, great. You know what I mean? Let's keep going. If it breaks to go into the downside, then we can start thinking about changing the direction or changing like your mind or whatever. And yeah, so that's what I'm thinking. Let me know what you guys are thinking. If you like this video, kind of new, I mean, kind of different, a little different. If you guys like that, let me know. It's just Investopedia. Like I said, the link will be in the description. Go check out that website, and or even when you Google some of the terms I use, like the trading patterns and stuff like that, Investopedia is probably going to pop up, and it's going to have an article, something like this. And maybe we could start looking at articles like this in the future, and like if it does well, potentially or whatever. But if you guys like this video, hit that thumbs up. If you want to check out today, the last video today, this morning, my Dogecoin videos that I usually do, check out it right here. If you're new to trading and tradingview.com, which is the website that I'm watching these charts on, check out this playlist right here, and I'll help get you started on TradingView. Give you the basic rundown. All right, if you guys like this video, hit the thumbs up, and I'll see you guys in the next one.